Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Sunday, December the 3rd, 2023. The markets opened slightly higher, now getting caught in a little bit of a downdraft, a little bit harder in the NASDAQ than it is in the S&P. I'm going to begin here on the NASDAQ. I'm actually going to start on the 4-hour chart so we can take a quick peek at what we might consider the little bit larger picture, and that's where I'm going to encompass the entire minor fifth wave that I'm currently counting up. And so there's the end of the fourth wave, and we're in a minor fifth, which will take 5 waves of minute degree before completing. Here we have minute 1, 2, minute 3, beautiful, very extended. This is the wave pattern that also had the thrust, the breadth of the market thrust indicator, this VEG indicator trigger. This was right here within this third wave. We saw an additional great deal of upside and strength in the market. And then we decided we needed to put in a fourth wave. And I had marked it complete as of, would have been Thursday's lows, putting in that low, with the market then beginning to rally again, hopefully within a fifth wave. Now, that's where we stand right now. I still believe no matter what, so we'll get into these details here on this internal move right now, but I still am looking for additional upside that will take the market, I believe, at least above 16,218, which is that current, or 208, which is that current high that we saw on the 29th. And so that would put wave 5 putting a new high in above wave 3, which I am definitely looking for. What we have is we have resistance, the 100. So in other words, where minute wave 5 would be equal to minute wave 1, that comes in below at 16,192. So again, if it were to finish there, it would be, in my mind, a very small failure, but a possibility. More likely, what I think can come in is a 1.618. So that's 16,400. Moving back over to here, the minor wave 5 would be equal to the minor wave 1 at 16,327. So I continue to look at this zone right here as being the area most likely to complete the minor fifth wave up. I cannot discount the 100%, where minute wave 5 would be 100% of minute wave 1. That is also out there. So our zone actually goes 16,192. The 16,242 is going to be more within this third wave, if indeed it is the third wave of that small 5. So, and I'm actually going to take that off right now. And I'll explain that in just a moment. So here we have 618, which the market reached, by the way, and then backed off. So again, we've got a lot of stuff going on. And I'm going to drop this down now to the hourly chart. So again, as far as that little bit larger picture goes, I still am looking for an additional rally that is likely to bring us back above and get us up above that 16,250 area, actually, and up into this zone up here. Now, dropping this down to the hourly chart, what I want to take a look at, and I'm just going to open this up because this is what becomes important. We're pretty satisfied that this is the third. And then we had an ABC down for wave 4. And guess what happened? We had an ABC up. And the market starts to come down. Now, it still could be 1, 2, or 1, 2, 3, 1, 2, 1 of 3, 2 of 3, a 3 of 3, or 1, 2, 1, 2, and we turn and we launch. Now, fact is that the market is kind of getting caught up on itself and not rallying. In fact, it's opening lower and now continuing to hang out down here versus picking up that rally again. So I begin to look at, okay, we got a 3 down, 3 up. This kind of can be a little bit like, okay, not really sure, but I want to include this as a possibility. So what we try to lay out here is that I try to lay out what are the two, obviously the market either go up or it's going to go down or it's going to do both, but what can we expect from either side? If we're going to continue to see lower levels and the market decides it's going to break below 15,965, that is going to leave it as 3 up. So we got the 3 down, we get the 3 up. So that to me just suggests that the wave 4 is still in progress. So that would be moved, and this would be wave A of 4, this would be wave B of 4, and now we're going to do a C wave down. So if that is the case, what will give it support is a break below 15,965. And or 963.50 actually is the exact number. And the reason why is because if this is just a small 4 or a 1, 2, 1, 2, then we have a little bit more room below there. But I don't necessarily want to see it come below 63 because it starts to leave it as a 3-wave pattern. And it would also be like if this starts to really give it up and suddenly starts to drop with some velocity, so to speak, then it's also going to be more in tune with it's putting a C wave in, a C wave of 4. Now, if that's going to be the case, where can it go? Well, luckily, we have still left up here the retracements for the 4th wave. Now, mind you, when we were here, it also had not even come down to the bare bones minimum for a 4th wave, which would have been 15,720. Now, I'm going to try to open this back up so we can see what we're looking at here. Let me just do this a little bit differently. So we can see that 4th wave has plenty of room and still rally because of the strength of that 3rd wave. So what was keeping the market higher was the potential that we were going to just continue to go up from here. Well, if the market is finding reason that, okay, we've gotten through Friday's expiration, now we can pull back, we can start taking a breather, and we're going to see some different things take place. Then, yes, we'd be looking for the market to kind of start to give it up. 15,720. Let me go one more time out there so I can look at the whole thing. But the 382 would be the most common. Now, the 4th wave of 1 lesser degree actually is right here. And then maybe we can also say it is here. And this is 1, 2, 3, 4. And then the 5th wave, yeah. So it actually is here. And we have exceeded that one. The next zone is here. And that's going to be in between the markers. And then the 3rd zone is here right at 382, which is most common for a 4th wave on a fib basis. So it's 15,418. First up, 15,720. But first up, we need to get a little bit more serious. So again, a break below that 62 level is going to begin to draw in, I think, additional sellers. And then we have that low at 15,856, which it would need to break. But I feel that if we start to break down, it is going to be likely going to be broken pretty quickly. We get something resembling this. Now, that could wait until tomorrow morning, or it could wait until Asian markets open, or then European markets open. Now, we have one thing on the outside, and you may notice it's like, wow, what's going on in gold? We have gotten reports today on that the Houthi rebels in Yemen have been firing drones and missiles, ballistic missiles, at commercial ships in the Red Sea, but also started to target a U.S. naval vessel that is out there in the Red Sea. And so that's been reported by the Pentagon. It's also been reported by some of the commercial ships. And so there could be an expansion, a widening of this war between Israel and the Hamas, which is actually now has been confined to the Gaza. So if it's going to start to get widened, are we going to start, so the market begins to get a little nervous about what's going on here. Gold is actually going straight up at the moment. It's up 56, and we've only been open for 50 minutes. So it's quite an intense move. There you have it. Now, in terms of gold on an Elliott basis, it's a third wave. So, but what's behind it is it broke, and this was today. This was today. It broke above the 618 resistance, and it has not looked back. And it's just powering higher. And again, global conflict, military conflict, gold, the rush into gold. And so, yeah, the next resistance, by the way, is 2173. And then above that, we have 2208 and 2307. These, and you can see, if this is already up 50, 56, is it going to be any trouble to have it up 75? Is it going to be any trouble to have it up 100? No. Gold can do that. Back to the NASDAQ. So depending on what happens, we need to leave open that potential that the market will break down. So I've just given you the two break points. 15,963, but a solid break below. And to be honest with you, it's got to come down and break the 20, which is at 69. It's now already broken back below slightly, but holding to it, the hourly 50. We've already we got above the hourly 200, but it was flat. See, and continues to be flat, which just basically gives it a point of resistance. And so we've gotten up back to it, and now dropping down below the 8, below the 50. The next up would be the 20, and a break below the 20 at 71, 72 may provide that slide that will take the market below 63 and on down below 856. And it may happen very quickly. That would then give us the clue that we're inside likely a third wave. Excuse me. Whoa, I was wrong on that. Not a third wave, but a C wave down. And then we have the other support zones that we just discussed. Now, should the market stabilize here, hold here, and then find a bid and find some buyers and start to push higher, then yes, we could say wave 4, 1, 2, 1, 2, 1, 2, and it should stop. But when it decides it's going to launch, it should launch. Not kind of fight it, come down, fight it, come down, fight it, come down. It may, but I'm telling you, when it finally kicks in, what's kicking in, even though it's an internal, it's kicking in a wave 3 of 3. So if this is 1, 2, 1, 2, what you're beginning to enter in is 3 of 3 of 5. So again, 16,063 should definitely get above it. 16,208, we'd be looking for it to get above it as well. I can add additional fibs once all this starts to play out. What we have right now is for minute wave 5. And there's the first marker. We've already discussed it. There's the second marker. We have ones above that. I'm not really going up there quite yet, but there's the 2.618. So, but again, I'm still looking for something. So I'm looking for it to finish the minute wave 5, and in turn, then the minor wave 5, and then in turn, the intermediate wave C and the primary. So it would be the second intermediate wave C. No, it would be just it would just be the intermediate wave C. A little trouble speaking today. So we have the A, the B, and we're now in the C wave. So I do think we're close, unless wave 5 decides to truly just extend and extend. But I think we're going to run out of catalyst. What's going to take it? we got the boost on Friday, and they wanted to say, well, because now the traders are just more certain that the Fed's not going to raise. They're going to start lowering rates beginning next year. And even with the Fed basically saying, that could be a little bit premature. That discussion, a little premature. And eventually, but that didn't really stop the market from rallying on Friday when it needed to. We got both sides had actually happened on Friday. And so, but that I believe was more options expiration related. So, but again, if they decide to put it in to give us that one last, I would expect it to be a solid move up and probably pretty quick. Okay, so over in the S&P, we're basically looking at the same thing, except let me bring it down. First of all, let's take a look at the 4-hour, and let's kind of open it up this way. And what I'm looking at, there's the X. I haven't done it yet, but I'm leaning pretty strongly towards it. These are, right? That's the X wave. What we're looking for is an additional intermediate degree ABC. So this is going to be wave A, intermediate A, but being that in the NASDAQ, I'm looking at that as being completion of the minor fifth wave and then the intermediate C wave and the primary B. I would likely switch the labeling. And these would be intermediate A, intermediate B. I know I got it. I really do get it on how that likely is not the smartest thing. But what if it is? So I would likely switch it. And this is going to be the intermediate wave C. But we will wait because it's going to be the market. But I'm just kind of telling you where my thought pattern would go. But I do think that what we are moving up in is a minute fifth wave, and it's completing a C wave. Whether that C wave is of minor degree or whether that C wave is of intermediate degree, we still have these upper levels to deal with. Now, down to the hourly chart, when we're looking at this, so we just can see what we did, the S&P broke the high. NASDAQ did not. NASDAQ didn't even really come close. But the S&P got itself above. So here, it's a little bit cleaner. ABC 4, done. But if we start to come down and we actually go below, and I'm going to put it right there. If we go below 45.85, all right, 13 points from where we are, that would invalidate that it's a 5 waves up and leave it as 3. ABC. So ABC down, ABC up. So is this A of 4, B of 4? And I got to show you something. Because I already did it. So you can go ahead and you guys can put it in yourselves so that you can see if we're just measuring for the 4th wave, you're measuring from that low to that high. Add 1.236. In fact, I'll just do it. So we got that. I'm going to put it down from that low to this high. And then I'm going to add my additional one above it. And it's going to be 236. 382 doesn't count. And it did it the other way. Sorry about that. I did it backwards. So let's remove that drawing. This should be 0. And this should be 100. Why is it coming up backwards? I'm going to take it out. Let's go this way. I just like the way I want to do it. I bet you it doesn't do it anyway. Yeah. Still not doing it. But we're going to see. If I put 1, 2, 3, 6 on there, and it comes up way too high. Before, it actually put it right there where I needed it. So if I take that off, go back down to the hourly chart, and sorry, let me do this differently. I'm not looking for it that way. I'm looking for it this way. And then I put, it's been a long day for me. And I'm going to put 1, 2, 3, 6 on because 1, 2, 3, 8, 2 is too high. Look where it came to. So my point is, and thank you for your patience while I figured out my own Fibonacci, My point here is that it could be. If we drop down and we break below there, it leaves 3 down, 3 up. And again, just as we did before, here we're running into but this one's a little cleaner. We run into a irregular B wave again, and it's within a 4th wave. Now, what that would suggest is that we got to start dropping pretty quickly, because if it's an irregular, then what are we looking for next? We'd be looking for, wrong one. I got to take this down. We'd be looking for the 1.618 on the way back down. Then we do the extensions, and we look there to there to there, 1.618, 45.23. Look where it happens to match up with. So again, we're into that same thing where we could drop all the way back down, put in a 4, and still rally in a 5th wave. So the market just really kind of twists and turns itself around without completing the outside pattern, which is, a rally. So we're still bouncing ourselves around, but in a bigger area. And yes, this would have been like, okay, what was it with that false breakout? That was a pretty strong move that it did, but maybe it will come back down. So again, there's your break point right there, because we have to count 1, 2, 3, 4, 5. 1 of 3, excuse me, 1 of 5, excuse me. Then we have 2 of 5. 1, 2, 1, 2. There's the possibility that I'm hanging on to. But if it comes down and it breaks, because I'm reviewing the downside picture right now, if it comes over and it breaks 45.85 and starts breaking that and picks up the steam, because at the same time, likely going to break the hourly 20, then we have the hourly 50, then we have the hourly 200 as it starts cruising down towards 45.23. 45.24, by the way, is 0.382, the most common for the 4th wave. So if this is all just continues to line up, it does the perfect little fib on the way up, if it comes back down and gets down to here, another perfect fib and still rallies. So that's my downside. Now on the upside, again, I'm just going to take this off. We still have these in place for the upside. 618, just a pause. That's what all I thought it would be. But where would minute 4 be equal to minute wave 1? That's going to be at 46.26. What am I actually looking for? If we've discussed before, I'm looking for this to get up a little bit higher. And I'm going to go over here to the 4-hour chart so that I can show you that what we're looking at here is minute, but what we're looking at here is the C wave. Now, the C wave would come in 100% of the A wave at 46.37. So that zone really does become 46.25 to 46.40. Now, that would tie it up with a nice ribbon, put a little bow on it, and just send it on its way. And then we would get that A, B, minute wave 4, 1, 2, 3, 4, 5. And then we still, being that we got to get ourselves up there, we still could possibly reach into the higher levels. So both sides are very plausible. The market needs to tell us. So I'm just now giving you the breakpoints for the downside. If it kicks in, what can we look for? If you're a day trader, it should provide some very nice downside activity, and it should go pretty quickly. But then again, once it reaches that level, I'm going to expect it to turn and to actually turn itself higher as well. If it holds above that level at 45.85, then I'd be looking for it to continue to move higher. That's the level, 45.85. Break below 45.84 with follow through starts to break it down. All right. And again, moving averages 45.83 for the 20, 45.72, 73 for the 50, and 45.65 for the 200, all simple moving averages. And then, of course, 45.44, which is the previous low. Okay. this is where I'm going to leave it for today. And tomorrow should be a very interesting day. And as you can just see, gold is extremely volatile right now, extremely volatile. It was just up massive, and it's just given back a large part. Gave back 16 points. It got up to 52. It's now trading at 30. Whew. It's moving. It is moving. That may contribute to the market turning itself around and going. And so we'll just keep an eye on it. Next update will be on Monday, December the 4th.